Hi, welcome to the Capital Region Skinny, brought to you by the Greater Capital Association of Realtors, where we dig into the most recent numbers from our market. New residential real estate activity has been relatively slow in the first quarter of 2018, yet housing is proving its resiliency in a consistently improving economy. Some markets have had increases in signed contracts, but the vast majority of the nation continues to experience fewer closed sales and lower inventory compared to last year at this time. Despite there being fewer homes for sale, buyer demand has remained strong enough to keep prices on the rise, which should continue for the foreseeable future. Pending sales increased 0.3% from March 2017 to 1,095 for the month. Closed sales increased 1.4% from March 2017 to 868 for the month. Sales were up compared to last year. This is a welcome and reassuring direction in a low-supply marketplace. Inventory levels market-wide decreased 23.3% to 4,118 units. Fewer homes for sale compared to last year was an expected outcome, despite anecdotal signs that sellers are ready to list and builders are ready to build. Prices were up compared to last year at this time. The median sales price increased 13.2% to $205,000. As long as demand is high and inventory is low, 2018 will continue to see year-over-year price increases well into the summer months. Month supply of inventory was down 24.1% to 4.1 months. Supply continues to be lower than last year at this time, as expected. Percent of original list price received at sale increased to 94.4% since last year. The Federal Reserve raised its short-term interest rate by 0.25% in March, citing concerns about inflation. It is the sixth rate increase by the Fed since December 2015, and at least 2 more rate increases are expected this year. Borrowing money will be more expensive, particularly for home equity loans, credit cards, and adjustable-rate mortgages, but rising wages and a low national unemployment rate that has been at 4.1% for 5 months in a row would seem to indicate that we are prepared for this. And although mortgage rates have risen to their highest point in 4 years, they have been quite low for several years. That's the Capital Region Skinny for this month. Check back next month for the latest.